Hello and welcome to the FinanceFeeds podcast series. And on episode 2 today, I'm joined by Paul Orford at AMB Prime in Cyprus. Hello, Paul.
Good morning, Andrew, and thanks for having me back again. And pleasure. Also, I'd like to say thanks for a fantastic event that we had, which you and Noam held at the marina. If anybody didn't attend, I suggest they do next time, which was the FinanceFeeds Cup.
Very kind of you to say so.
It really is a fantastic event and great networking opportunities as well.
It was indeed, and certainly this is a series which will become more and more popular as time goes on. I think it's certainly something that's necessary in the industry. So we all look forward to seeing you next time.
Yeah, great. Just quickly, the one in London, where could you outline the times maybe for the listeners, perhaps?
Yes, indeed, absolutely. This coming week, on Wednesday the 16th of November, we are hosting the London Cup, the FinanceFeeds London Cup, which will be held at Calu Calais in Rivington Street in London. So starting at 6 p.m, we have 120 senior industry executives coming, one of which indeed is yourself, which is excellent. So we'll look forward to seeing you there.
Perfect. Well, I'll definitely be there. 100%. I'll be there banging the door down.
Excellent. Talking of London, that's a poignant time to bring that up. Talking of London, one of the things I'd like to discuss today is certainly an area where you're an expert, which is the prime brokerage and liquidity aggregation sector, which London is one of the world's epicenters for this.
Yeah, well, you're 100% on the money there with regards to London. It really is a central location globally for liquidity. You have all the major players there. It's the credibility of its location, its license is second to none. Okay, however, that's not to say that where we're not based there, that we don't have that. It's just where the prime brokerage section, that's where it's at its strongest.
And there's been a prime brokerage explosion this year, and that's something I'd like to get your opinion on.
Yes.
Is that London has seen quite a lot of new entrants into this particular sector, into the institutional liquidity provision sector, over the last couple of years. And really, I think it's important, especially from a retail broker's point of view, to be able to distinguish between firms that claim to be a prime of prime, which is a prime of prime is a company which takes its liquidity feeds directly from tier 1 banks and aggregates them from the source. And those who are actually offering institutional services but internalising orders on their own trading desks, and therefore why it's important to have a good liquidity management system and a proper prime brokerage.
Well, it's a really hot topic as well at the moment, because you will see a number of brokerages who are offering the institutional service. However, they wouldn't be aiming at the same target market as myself. Advanced markets, for example, they're not aiming for the same people that we are. These ones, they are giving access to people who they may find challenged opening an account with ourselves or advanced markets, Invest, etc., for regulatory reasons, financial reasons, many other different facets. So it's kind of like the last port in a storm, okay, where they can't actually open the account, because where we're institutional, we have a higher threshold for who we can accept or can't accept.
Yes, so you're effectively aligning yourself with companies such as Invest Pure Prime or Advanced Markets or Saxo Bank, which are real prime of primes, and that's really where you see your AMB Prime is in that particular scope.
Yeah, I mean, our target client would be a hedge fund, a high volume trader, we'd call it. FX brokerages, we're just looking for volume.
Yes.
That'd be we're the same as Advanced. All of a real prime brokerage or prime brokerage, all we want is volume. We're not too interested in maybe suggesting to them, hey, look, if you want to do the B book, you can make more money, etc., etc. All we want is volume. We have a very simple relationship and a more transparent relationship as well. Because when you deal with technology partners such as 10, Prime XM, Goldeye, which I believe are the blue chips of the industry in that sector. The client can then see where the trades are executed. Everything is so transparent that it gives them credibility when they speak to their clients as well, which is what they're all after. You know, if I'm a client, if I want to trade, I want to know where all my trades are executed, etc., etc. If they're just looking to take the price feed, the brokerage in this respect, then it's not really the sort of market that we're looking for, because we make nothing from it. And I suggest maybe that would be the same with our competitors and peers. I don't know their business model, but what you'd be making would be the minimum monthly fee, which in the scheme of things is peanuts.
Yeah, indeed. And I think that's really the right way to do it. Also nowadays there's a difficulty which has a difficulty with the tier one banks extending credit to the OTC derivatives sector, which we've covered and you and I have talked about at length over the past few months. And actually this has opened a way in which companies such as AMB Prime and other prime of primes can actually perform the place of the tier one bank by fostering better prime of prime relationships, and therefore have a non-bank. It's like the rise of the non-bank sector, where you can have aggregated liquidity delivered via not only tier one bank feeds, but electronic communication networks such as Thomson Reuters, FXall, ICAP's EBS Brokertech division, or Coronex, combined with the banks, and therefore it gives a more comprehensive set of aggregated liquidity feeds to be able to process the orders accurately whilst handling the restriction in credit that the banks have actually imposed on everybody.
Yeah, a lot of the time you've brought this up as well on your website with news stories such the industry's been strangled with their relationships with tier one banks and good quality prime brokerages. So you're going to see a radical change in the landscape of prime brokerage, private prime brokerage, and their relationship with FX brokerages. Because if they're unregulated, for example, they're going to find it incredibly difficult to open up an account with ourselves or one of our competitors. Also, with the payment service providers, the whole ecosystem of their business is going to be incredibly challenged.
Yes.
So I'm not sure where that's going to take us in the next few years, because is that going to drive them into the arms of being regulated with a more recognized regulator? Or will they go further to the unregulated world where they create their own, or they find a source which could offer them a liquidity source or a market making source where, they don't need too much in the way of documentation, KYC, etc., where it's a different landscape.
Well, I think that's right. I think it's going to be a lot of consolidation will happen. I see that. You've brought up a very good point there, because I see that ending up in three particular outcomes. One is companies which will improve themselves, invest more capital, have a larger capital base to be able to satisfy the banks and liquidity providers, and actually go down the route of regulating themselves in good quality jurisdictions and putting aside the regulatory capital and even bringing on board regulatory technology such as that offered by Capitec or Mapes Platis in Cyprus, or any of those particular regtech firms which help them stay on the right side of the regulator automatically. And then they will go to companies like AMB Prime or Advanced Markets or Invast or Saxo Bank and other prime of prime, Sutton Financial in London, prime of primes like that, and then therefore stay on and process their orders through to there, knowing that the relationship with them is good because the capital base of the brokerage is high enough, and also those particular companies are prime of prime and know how to manage the liquidity and process it properly. Therefore, it's completely transparent. That's one aspect that will happen. The other aspect is that you'll have middle of the range brokerages which don't have the wish to actually put aside so much capital and uproot their entire execution model and change the whole way they operate, or in fact purchase other brokers that might do that for them. And what they will do is still remain regulated in good jurisdictions, but they will take price feeds from large retail firms and let them internalize that particular orders on the one level above the retail brokerage in maybe the institutional division of a retail firm that sells its own liquidity. That's the second thing I can see happening. The third is just for the ones that you mentioned that might be in lesser well-known regions or have a client base in certain regions which doesn't align with regulation. They'll just turn into B-book market makers without any liquidity feed whatsoever, and they'll carry on like that. That's how I see it. I think I could concur with you in that respect. It's going to be a really interesting couple of years coming up. Certainly is.
Because everything the previous 5 years has kind of been much the same. Nothing's really changed.
No, indeed.
But you are going to see a lot of regulatory changes. For example, the regions such as the BVI, etc., and these ones, they're really clamping down on people now. You know, it's not like it used to be where people could open up a brokerage relatively straightforward, you know, get the license from BVI or St. Vincent. Yeah. It doesn't take too long, doesn't take too much of an inclination to do this. Get the MT4 white label or full package, and, you know, with all the other integrations, it's relatively straightforward to do. Yes. You know, but now this is all changing. It's going to change radically. So we'll see how this goes and how that reflects on us and our peers as well. We'll have to see, because we're always reacting to what the regulators tell us about who and who we cannot take. That's right. So it's going to be very, very interesting how it goes.
I think that's right. I think the sophistication level within the prime of primes has increased tremendously. Many of them have hired senior executives who have come from the interbank sector and the interbank technology sector, where they know how to process order. They know exactly how the order flow is processed, and they have good relationships with the banks because they are people who have worked in those banks for many, many years. For example, some of the new firms nowadays have designed series of tools which optimize flow to the market, and then they use that technology to allow corporate clients, which are basically brokerages, to be able to allow prime of prime service, which shows the brokerage what their flow looks like and how liquidity providers all kind of accessing the view that the brokerages are providing to the prime of prime. This is now transparent, and of course many firms in that sector have regular conversations with each other and understand the metrics and the sources of liquidity that they actually have to evaluate to be able to provide the right kind of flow, so they can show their clients that flow. I think that sort of transparency will be more common in the future.
Yeah. Also, it'll be interesting to see how this is reflected in the development of technology. You know, will there be any major differences to bridge technology, for example? You know, will that spur? Because sometimes things like this, it gives us a great leap forward. You know, when you do have these situations. Yeah, because there are many people out there, you know, the industry always does need, I think, to be invigorated, and it can get quite very much the same old with a lot of people. So people who are proactive and do follow the changes, I think they can see their business flourish. But if they stick to the same old model and they're not too well established, maybe that will they will just drift off.
Well, that's absolutely right. You're absolutely right, 100% right. The bridge technology will take a more active part in, rather than just being the actual integration component that connects the platform to liquidity providers and manages the order flow. What's happening now is you have companies like 10, which have developed what they call the ecosystem model, and the idea of it is part of the liquidity bridge technology. But what it's intended to do is foster better prime of prime relationships. And actually, I spoke to the chief executive of the company recently, who explained to me that if you foster those relationships like that, use the ecosystem model to actually get a series of prime of primes and aggregators, the cost per million will go down to almost $1.
Yeah. You can seriously cut down on the commissions per. You know, he's right in what he says, because if this is nurtured correctly, the overheads of the brokerage drop dramatically as well. Yes. Also, if the liquidity provider has a good relationship with the bridge provider or providers, then you'll see a reduction in commissions there as well. But all this only benefits clients really who are passing the trades on.
That's right.
You know, so if they are internalising it themselves, again, this follows the new model which will perhaps happen. Well, you know, where they'll go to another source for, we'll call it liquidity in inverted commas, because it's not really, because they're not being passed on to the market. So
that's right, and I don't think in my opinion is, and I think I've thought about this for a long time, that I think internalisation will always be a big prominent part of any retail brokerage, but the prime of prime element is more intrusive now in that, because you can't get away with just making your own prices and running an order book that's based on some dealer who is actually doing it in favour of the company. That can't happen anymore. So, but internalisation to protect the brokerage and its customers from certain things is commonplace. However, with a price feed from a prime brokerage, and as long as the system is executing the orders according to the price feed, you know, you can have a brokerage which takes your price feed, for example, executes it according to your price feed, but does it internally. Therefore, there's no risk to them, and they also can't expose themselves or their customer to negative balances. So that is transparent and an honest way of operating in execution. That's okay, and I think that will still continue. But all of the newly established primes will find that to their advantage, because they won't have to. If they're just providing a price feed, which is a reference point, rather than actually taking the risk, then they won't have to have such large capital bases, and they can take a good quality regulated brokerage that doesn't have such a high capital base and insist that they run a B book, but do it according to the liquidity fee that they're getting from the prime brokerage. I don't think there's anything wrong with that.
How would that reflect, okay, with various jurisdictions, the regulator always outlines that you must source the best possible price for your clients.
Yes, they do, and certainly
okay,
the FCA
if they're just internalizing, okay, and let's presume that they don't have the license, okay, then how can they justify that? I mean, not only are they going to get hammered for not having the license, but they're constantly having to look and prove to the regulator as well that they're having to source the best possible pricing.
Yeah, that's right.
How is this going to be achieved?
I think that's okay, because it depends how. Again, it's a question of the FCA insists on best execution. They've actually made a point of that in writing many times, and they've done investigations.
Yeah, well, that would be European wide, won't it?
Yes, because of EMIR, the Market Infrastructure Regulation. So that's right. However, there are two examples here. IBFX in America it was a subsidiary of Monex, the Japanese Japanese company. Using the TradeStation platform, got caught for internalizing trades about 3-4 years ago, and fined $600,000. But that's because what they were doing was warehousing them on their own book without actually referring it to a liquidity feed, and then they were taking small accounts and selling them off to another company. So that is illegal. So they got in trouble for that. However, you have in Britain spread betting firms like IG Group, which is a massive public listed company, FCA regulated. The vast majority of their work is B-book, because that's the nature of that particular sector.
Yeah, they're creating the market.
They're creating the market. However, they are going by a live liquidity feed and executing according to correct market prices. So that is okay, and there's nothing wrong with that, in my opinion. It's a question of where that price is coming from. If a complaint happens and a regulator gets called in, they will ask to see the price. They want to know how they arrived at those prices. So they get on the back end of the MetaTrader or whichever platform. They're in the case of British brokerages, their proprietary platform, and they will work out according to the. Then they'll go to the prime brokerage and say, let's have a look at your order flow and trade reporting, and it matches. If it doesn't match, you're in big trouble.
Yeah, of course, definitely. And that's a good thing though, because it shows the transparency, and it really is pushing the brokerage to be whiter than white, and let's face it, we do need it, because we all get tarred with the same brush.
Yeah, sometimes.
So it is good to keep people on the straight and narrow.
It is indeed. What do you, just to summarise, what would you give? What advice would you give to new prime of primes who are establishing? It's very difficult nowadays to establish relationships with tier 1 banks and aggregate that liquidity and sell it out to retail brokerages. What do you think is the best thing they could possibly do in the early stages of their prime of prime business in such a competitive marketplace at the moment?
Well, it's a $1 million question, essentially. It's all about relationships. So just try and get as many relationships as you can with these people here. It depends upon how much funds they have as well. It's because there are some people who are beginning their business, maybe only have a couple of million spare, but you really do need to get them relationships with the prime of prime or prime brokerage. So you can go on to the client and say, look, this is who we're using, A, B, and C. Gives them more confidence. But when they start off, make sure everything is aligned, everything is clear, everything is perfect. So they can offer that transparency to their client. So it's all about building that relationship with the PBs, with the prime of primes. So therefore, when you open a day door one, boom, you can tell people that everything's smooth.
Yeah, I agree with that entirely. Sounds absolutely right. We will certainly keep on. This is a subject we will keep reporting on, because it's very, very important at the moment. And no doubt it will be something which the whole industry will be talking about next week in London. So we will certainly report from there, you and I, and we will...
definitely. It'd be very, very interesting. Looking forward to it already.
Absolutely, indeed. Very nice to speak to you again, Paul, and see you...
Always a pleasure, Andrew. See you next week.
See you next week. Thank you very much.
Cheers, thanks. Bye-bye.
That's Paul Orford at A&B Prime in Cyprus. Thank you very much for joining us. See you next time. All the best.